Hello friends, let us now look at balance sheet in detail. What we have looked at earlier in the video series is about the income statement, where we understood that income statement was all about the profitability of the company, and it was during a specific period of time. Now the next question comes is, what is balance sheet and how do we take it ahead? The first thing that you must note about a balance sheet is that it is at a specific point of time. So here we have a sample Fast Track Movers and Packers balance sheet. It was dated 31st of December 2007. So this is at a specific point of time. What does balance sheet provides us? It provides us with details of company's resources at this point in time. So what were the company's resources on 31st of December 2007? The balance sheet provides us with those details. Now, if you look at the balance sheet very closely, you will find that it has broadly two divisions. One is the asset side and the other one is the liability and stockholder or shareholders equity side. Now, the asset is essentially a snapshot of the company's resources that has been deployed for generating the business income. However, when we look at the liability side, it's basically the funding of these resources. So how these resources have been funded is provided by the liabilities and the shareholders equity side. An important equation that one should keep in mind is that the assets, which is the total assets here, is always equal to the liabilities and the shareholders equity. We will get into the details of what these current assets, long-term assets, current liabilities, long-term liabilities and shareholders equity mean in a bit detail. But just for the sake of explanation here, current assets is essentially those set of assets which are kind of very liquid. Say for example cash. So if you have cash in hand, that is current assets. Account receivables, inventories are also classified as current assets. We'll discuss these in a bit detail. Long-term assets are those assets which are used over a period of time. So say for example machinery. So these are again long-term assets. Machinery that you use basically for generating a finished product which is ultimately sold to generate business income. So that would be classified as long-term assets. On the right hand side where the liabilities are present, we have the first section as current liabilities. These are those liabilities which we have to pay in the near future. The word current essentially mentions that it is something which is in the near term. Long-term liabilities are those set of obligations that you may pay over a period of time. Long-term liabilities are essentially useful to fund larger projects like plant and equipment or machinery. Coming to the fifth section, which is the stockholders equity section or the shareholders equity section. Essentially, this is the difference between total assets and liabilities. So if you look at this equation here, shareholders equity, asset minus liability will give you the shareholders equity. We will limit the discussion of shareholders equity at this definition for the time being. We will discuss all of these in much more detail because this is divided into various types, common stocks, retained earnings, etc. So all those things in greater detail when we discuss this section fully dedicated to it. So let us now move forward and discuss current assets and long-term assets from the total asset side first.